Hey everyone, round three, let's go. And we start with Fisker. It was in the previous video as well, but it wasn't clear that it's in it, so I'll do it here as well. Um, Middle of the channel and no clear direction. Have to look for a loss of this trend line in which we go to 4.4-ish or a break above this trend line and target is 6.9. But keep in mind that we can chop here for a while, like a week, maybe even more, before getting direction either up or down. Until then, just wait it out. GE. So for GE, we lost the trend line, and now we have a couple of scenarios for going up and for going down. Most likely we will get rejected when attempting to recapture the trend line. It The way it happens can vary, like it could be a quick move up that gets rejected quickly, and then we start another leg down, and target is this 103, 104 area where the trend line is. After that, I think we go up, retest the highs, and can potentially even start another leg higher if we break above and consolidate a bit and then start. And the target for next leg higher is 142. This is a huge volume pocket. It moved very quickly through it. It will do the same up. So it will do it. It will be like a week, maybe 2 weeks, in which it goes from 116 to 142 when and if this happens. Now, for the rejection part, another option would be a slow move up, hugging the trend line and then getting rejected. Um, Here we have to watch it again. So we go down, we go back up, have to watch for rejection. We might get rejected, in which case we likely lose this trend line as well and go for something like 97, 95. This area here would be the target for later in the year. Okay. GME. Well, I can imagine GME has good earnings, and we're coming close to earnings. Probably that's the reason for the weakness. Uh, but we are very oversold on RSI. This is the most oversold we've been since the squeeze. Price usually, yeah, we usually get the bounce around this level. But because earnings is coming in 2 weeks, I don't think we get a breakout yet. So my scenario would be short-term bounce up to 19, maybe even 20. Uh, Then we do another leg down in anticipation of earnings, and maybe we get a dump on earnings that takes us to just below 16. The current area is not very demand-wise, so I don't think we bounce here. Like, I don't think we bounce here where we are for the long run. And there can be a bounce, but not. This is not the bottom. So I'm more inclined towards going a bit lower and then bouncing, and we won't get a full reversal and move up until after earnings. And after earnings, we start the movie release uh, pre-rally, and then potentially we get a super high squeeze. Maybe it does even this when the movie comes out here, I think 26th. This is unlikely. Like maybe this is the post-movie rally. Shall see. But everything else excluded, expect weakness going into earnings. Earnings we see bottom, and then we start a rally. I like Google quite a bit, and I think we see like a full cup forming, meaning we retest the all-time high and do like cup and handle thing in which we do a 50% pullback, which would be around here. This is more than that. Let me check. Oh, that's it. So it's perfect. So this is what I expect from Google. And going back to the daily, we have this bull flagish structure going for us. Uh, we may go a bit lower. I don't think we lose 125, 126. And then we start going up. We break above the other trend line, the one from the top. And then we just squeeze higher, make new high here, consolidate a bit, and then start the next leg up and go to the top. This is kind of how I see Google playing, and it's my favorite one from the mega caps based on this. Well, gap. Drew this earlier. So we are on this trend line. We're close to a middle of a big range, like the double top breakdown range. And uh, earnings next week. So it will depend a lot on earnings. But I have, come on, undo to the right thing. Okay, let's make this into a channel with this level as the midpoint. If we get a breakdown, I think we hold on this level and then just start moving higher in the lower boundary of the channel. This is kind of my expectation. Uh, this one you can ignore. Like I think we just keep going up and up and up because it looks quite nice from my perspective. May get rejected here, but if we ever lose the channel, we probably go down. But I think we just go like this and eventually reach 13. If earnings are good, same thing, but in the upper boundary of the channel. So no pullback, and it just goes higher and higher. Same target at 1393-ish. The big level to see is 11. If we take back 11, I expect the move to 14. If we get rejected from 11 in a meaningful way, expect potentially going as low as 8. Hershey. So Hershey looks like they invented the cancer-giving candy or something. Look at this shit here. It looks horrible. And full flush down. Uh, the thing is, this demand zone is tapped out, I believe. So I don't think we will see a very strong bounce from this level. And I'll explain in a second. The real demand zone that is high quality is this one here at 206. So I think we may get a bounce short term because we are super oversold and seeing like a wave. We are in the third wave of a drop, like wave 1, pullback, wave 2, pullback, wave 5. And it's a very extended wave 5, meaning we should see a pullback. And the pullback is an ABC structure, so something like this, I think. And then we start another leg down. Uh, the reasoning why I think we just do like a short-term bounce and then the bottom is not in is because the demand zone is not a strong one in my opinion. Uh, we may not go as low as this, but I think the classic double test the lows move like this will overshoot for sure. This is way too weak to recover in a strong manner. And even on Friday, like it was a small rebound, but volume is low, indicating potential for further sell-off. So I would not be bullish on this one until we get to 200, the 200 area. And even place this is meh. Like I would prefer shorting here than going long for this piece here. So keep an eye on 225, and if you see it getting rejected, I think this is a nice trade to take. IONQ. Okay, this one is a bit more complicated. I'll explain why I drew the lines like this. So this was a SPAC play, and usually the IPO level is important, but in this case, because it was a SPAC, all this period here, it means it was a blank slate company, it didn't do anything. So what we're looking for in a SPAC play as very important levels are what it does after the SPAC. And the highs and lows of the first couple of moves after the SPAC are very important. And lo and behold, they hold true. So we have this level here, we have this level here, and they were relevant going forward as well, like here, 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 important. Let me put this one as well. Now, the thing right now, it looks like a head and shoulders. And if this is truly a head and shoulder structure, target is 715, this level here. Um, Question is, what will it do next week? From what I see, this is weakness. So I think it goes backtest this, gets rejected, goes to 11.4-ish, and then we see. I think we get a bounce from 11.4-ish for sure, but then on the next attempt to go up, look what happens at 13.4. If it recaptures, then we can see a double top up to here, and this is no longer relevant. Sorry. If it gets rejected, then we are sort of realizing the head and shoulders, and most likely it will start going down with a target of 722, like I said. Kraft Heinz. So I like this quite a bit. The only problem is the demand area is tired, and I think we will overshoot compared to this low before going higher, before bottoming. And basically this, we have a short-term bounce, we do another leg down to 31, 32, bottom out a bit, and then start going up. This kind of aligns with earnings the way I drew it, uh, not intended necessarily. So after that, I think it will behave quite nicely. If this were to break down, it has a lot of room to fall, like probably this, like 25, if it were to get nasty. Okay, Lockheed Martin. So for this one, you see this RSI pattern in which we go kind of sideways down around 60, 70. Now look at it here, look at it here, here as well. Well, this is obviously not bullish, as you can see for yourself what happened after each type of consolidation like this. And now we are seeing it again, and it's even weaker. Uh, this makes me believe that we have one last push up. We will get rejected in this 467, 470 area, and then we do a more substantial pullback along the lines of what happened here. And the target is still this 400 area. Uh, After which potentially a bounce, go to 470 again, and then a full breakdown. But this is, it depends what happened when we get to this area. This could be weakness, we could lose the trend line, we could go even lower, it's possible. But for now, this doesn't look bullish at all, and I think it will apply to all weapon manufacturers or defense industry stuff. Uh, there's probably fear that the Ukraine war will end or something like that, and people are starting to prepare by selling these things off. So yeah, something like this, they don't look strong at all. Okay, I put Louis Vuitton here. It's one of my picks. It's looking weak. We have a double top here almost formed, and the target, if it realizes, is this. Now, how will this realize? Like it could happen now, or we could go for a triple top. And I think we bounce a bit. If we get rejected and lose the low, it's all over. We go down. That's this. Get rejected, new lows, get rejected, and then we just keep going down. And maybe here we bounce. Potentially could potentially go even lower. We'll see. Um, the other option is going for a triple top. Usually this don't make it up to the highs. They stop a bit sooner, either here at the low of the range, or goes a bit higher, but at the high of this range, but doesn't reach the top, and then it loses it and begins a large drop. Target is the same place at 717. Lift. Lift is probably my favorite play here. Um, it's only a matter of timing. So this looks bullish. Um, and if we go above this level and start going up, we have the gap fill to go through all of this. The thing is that and it's going to be a squeeze like move, like this is a huge 50%. And it will be a lot faster than what I drew here, like maybe more like this exponential. It will have momentum. It will be a squeeze play. People jump on and so on and so on. So as soon as it gets above 12, and it will start accelerating probably, then accelerate even more, then accelerate even more. And because of that, it will overshoot the gap fill most likely because of momentum. This is what I believe. The problem with the play is just timing. Like we could go sideways for another week or two. So most likely it's a good idea to wait for the breakout itself because it has a lot of room to go higher. If you jump in now directly, it's get something further out, not 30 days out, maybe like 2 months, 3 months out. And when we break out completely, you can go for the short-term play. This volume pattern is bullish, like the pullback was low volume. So yeah, it's looking quite decent. If we break down, we test up the lows. This is a 100% buy. If we get back to 8.2, quite a nice name here to trade. Watch reach. Okay. Real estate. Yeah, I drew a couple of lines on this one, like this. Let's go back to the daily. We are close to the middle of the range. Um, just watch what happened. That's what happens at 11. That's all I can say about it. Uh, the way we went above 11 and oops, one up, one down, one up, one down, breakdown. Look for the same thing. So if we break down, and when the breakdown came, we went to the lows here. If we break down again, we go to the lows. If we break out, we go back to 13 here. And again, and when we get to 13, if we get to 13, look for another rejection, because I don't think there's any reason to assume it's going to be bullish, or it's going to break out. Of course, there can be an overshoot, but when we go back in, short it. Uh, that's all I can say. I don't have anything else. It's a name I'm not familiar with. So MACD double top uh, is looking quite nice. The volume came in on Friday for this small bounce here, and I think we go for the triple top with an overshoot up to and go a bit above 300. So previous top was 298. I think this time we go above 300 for the triple top, and then we have a more substantial drop here. So I think so we double this, right? Yep, that's 302.52. This is my reasoning. We get to 302.62, 302-ish. Let's do 302.5. That's the target, and then we get a larger correction and go back to 261, maybe even lower. It depends what happens to the market. But for now, I like this a lot. I don't think we go lower in a meaningful way. Even if we go lower, it's likely going to be an overshoot, so maybe to 275, and then bounce, recapture, and go up. Okay, that's it for this batch. Next in the new video. Have a good one. Bye bye.